Hello, good evening. Hello, good evening. And welcome to this today's section of Forex review. I took a trade today, and by name, Dynamic Trader, and you're welcome to my YouTube channel. Please, if you're watching for the first time, kindly like, subscribe, and share the link to this YouTube channel to your friends and family. Okay, today I will run you through uh, the trade I took on EURUSD today uh, during London section, and after which we also have run a review of the volatility 25 setup or forecast I did yesterday. So let me quickly show you the trade I took on EURUSD today during London section. And for those that are just that are new to forex trading, we have sections of the markets, and these sections uh, comprise of the New York section, the London section, the Sydney section, and the Asian section. And if you're watching from Nigeria, anything from the hours of 6, 7, 8, 9, 10, 11, 12, 1, and 2 is actually still referred to as London section, while anything from 1, 2, 3, 4, 5, 6 is referred to as New York section. Then from that time down to 5 in the morning in Nigerian time is actually Asian section. So I would advise those that are new to forex trading, know anything about anything 6 p.m. down upwards, please, you should avoid trading because there will be no volatility in the market, and trading at those times is actually kind of not too nice for me. But there are some pairs that move during Asian sections, like the JPY pairs, and NZD USD also moves during that time. So any pair that have JPY, that's Japanese yen, like the USD JPY, GBP JPY, NZD JPY, Euro JPY, and the rest of them, AUD JPY. Anything that comprises of Japanese yen is actually moves during Asian time. Of course, you know that JPY, and it has to do with yen, is from the Asia. All right. So, okay, let's use the trading view for me to show you the trade I saw on EURUSD. And this year, 2025, I'm looking at concentrating just on EURUSD. Over time, I've been dabbling from one currency pair to another, even though the strategy I trade is applicable on those pairs. But then I've resolved to focus on EURUSD this year, 2025, and I'm looking at making a lot of profits from it. So I enjoy you to join me in this very journey, and I promise you won't regret it. I promise. Trading view is taking time to load. Okay, let's see if we can use this one. That's derivative broker. So sometimes when I'm using derivative trading view, it's not loading fast or it's trying to be slow, I will just switch to derivative. Yeah. So let's give it a little time to load up. So let me see. Euro USD. All right. Here is the trade I took on Euro USD today. Today being the third day of January 2025. Okay, I'm going to be sharing my secret strategy, which is using the Asian high and low, and it's a very simple analysis. And I think I'm going to make a full lesson on that. And you can see the indicator that I'm using, Q zones. So I'm going to elaborate more on that. So what I simply saw was that it's about, I said around 6 Nigerian time. So you can just be on your bed and you just wake up around 6, 7, or 8. So you can see when I place this vertical, I place it around 6. So what I simply saw was that the markets has actually swept this low. For those of you that might want to ask a question, I trade SMC, smart money concept. So I saw that the liquidity on this Asian, now look at this is what we call Asian range. All right, I'm going to be explaining the types of markets, what makes up the 3 types of markets. We have the ranging, we have the uh, uptrend, and we have the downtrend. So this is a range. When you say something is on the range, it simply means that it's in a box or it's moving sideways. It's not really making higher highs and higher lows. It's just inside, just as I'm illustrating here. So it means that it's in a range. So until there is a break below or break above, the market is still in a range. So I don't want this class to be too long. Okay, so let me quickly show you how I was able to work on this trade and look at the win rates as it's going. So when I saw this trade, I saw that it has swept liquidity below, all right, and it has swept liquidity above. Okay, so what I simply did was, I think I came down to the 15-minute time frame to mark out this particular order block. So let's go down to 15-minute time frame. Now, on the 15-minute time frame, okay, I saw this order block because this was the order block that was swept, and this same order block caused this break of structure, as you can see. So permit me now to delete, as in to hide this indicator. So I trade SMC, like I said. So now this particular order block becomes my point of interest. So I marked out this order block. Now the market has done what? It swept liquidity and also broke structure. So the market was around here. So what I simply did was marking out this order block, which is this, waited for the market to return to this POI, we call it POI, which simply means point of interest. And I look to target around 1:4. And clearly, the market is still trading to the upside as uh, as analyzed, and you can see we're almost there. And this is what we call risk to reward. So the trade just around 11 pip stop loss, while the take profit is about 44.5 pips. So this is clearly 1:4 risk to reward. So this year I've resolved to be taking just trades that have to do with 1:4. 1:4 is okay. All right. So, but the most dangerous trade that you'd want to take is a 1:1 risk to reward, which is not correct. So it's not a good risk to reward or risk management trade. So with this, I've been able to explain the trade I took today. And if you have any question, please drop it in the comment section, and I will see a way to answer your questions. Okay?